I'm Jason Kosec, President and CEO of Integra Resources. Integra is an exploration and development company focusing on near-surface heap-leachable ounces in the Great Basin. Currently, we are the largest gold and silver resource endowment that is not controlled by a major mining company.
Jason, good to see you.
You too.
Yeah, you've been here loads though, right?
Yeah, it's good. Like I actually love coming here. I'd prefer if they did it in the winter so I could ski, but
Beautiful. Beautiful.
I'll take it.
But the other beautiful thing is lots of people have rocked out. I hear over 8,000 meetings over the course of the next 4 days, which is good news. So what are you here to do?
You know, I think just give an update to all of our existing shareholders. There's a lot of other bigger corporates that are sniffing around for quality projects, and especially companies that want NAV exposure into the United States.
Right. Okay. So look, you did a merger of equals, and you know it's almost like that kind of cliche. What do you get if you merge two $100 million companies? One $100 million company, and it's happened, right? The market's been tough out there on you, well, on everyone, but you know, there's been tough on you guys. So, what are you going to do about it?
You know, you say that, Matt, and you're right. The market is what the market is, okay? And the reality is that, unfortunately, we cannot control the market. What we can control is what we say we're going to do. We do it and deliver it on time and on budget. And frankly, you know, maybe there was a little bit more pressure coming from the merger than we thought. That's the reality. Right. But I strongly believe, you know, we delivered a robust PEA that blew out market expectations. We'll be delivering our updated resource. We're going to be submitting our mine plan, and then the feasibility at the end of next year, all in conjunction with some really big exploration next year in Nevada. We deliver all of that, the market will give you value. Okay, and we cannot control things that are not in our control, right?
Right. Okay. So shall we split up the Nevada and the Idaho?
Totally.
Assets? Let's stick with your baby or babies down in Nevada. Okay. The PEA came out. Like you say, some pretty good numbers. Didn't get any reaction in the marketplace. It is a PEA after all, but nevertheless, it indicates potential. So what are you going to do about it? Resource.
Yeah. So I think one of the things too is you got to remember is that in that PEA, 80% of the resource is indicated. Commonly, you don't ever see that. Commonly, it's 20% indicated, right? The conversion rate on a tonnage and ounces basis is around 87 to 90%. You know, on an engineering level, it was about 15% engineering. Reason why it wasn't at PFS is we need to do a little bit more met work. Okay. So we got to remember is that those projects in Nevada have only been drilled on 5 acres. And we delivered 1.5 million ounces, 80% indicated, and delivered $310 million of value. You know, the initial capex is 115. So when we get the exploration plan of operations, should be Q1, Q2, the idea is what we always wanted to do is deliver this PEA so that people can see the economics. And not only that is you remove a lot of the risk. You know, people forget, as much as we're in the business of adding ounces in a systematic, scientific manner, we're also in the business of risk mitigation. So what we want to do is before you do a big drill program, you want to answer what your conversion rate is, what your met recoveries are, what your geotech is, and how big can it actually get. And once we removed all those and saw, okay, met's great, geotech's great, conversion's great, this is the scale. Now next year is going to be the exciting thing, and you know, every 10% you grow that resource is another 46 million in after-tax free cash flow. So it's significant growth.
I think that's the key point and where we're going, because you know, people will be looking at from outside in at this and going, "That's a low-grade project. Great as king. I'm off over somewhere else, right?" But the economics in the PA are, I think you don't have to preach the crowd.
I'm getting excited.
But that's the reality of, you know, of how maybe the average retail investor might look at you guys, right? So you got to say, okay, the grade is low, but that doesn't matter. That's like one variable of many. We are going to demonstrate scale, and if we can, then you should get excited. So what are you doing about that?
Yeah, you know, I think people always fixate on grade, okay? Grade is, don't get me wrong, grade helps, okay? It does. But low-grade deposits make great miners, okay? And mining is like any other business in the world, Matt. We all know this. It just comes down to margin. So one of the things people forget is you need to look at a strip-adjusted grade basis. You know, that's really what drives a lot of it. And obviously the recovery. And when you do that, you know, the Nevada projects are the highest strip adjusted grade projects in the basin. You know, strip adjusted grade about 0.42, 0.45, depending on how we run our whittles.
Yeah.
You know, the average in the basin strip adjusted is 0.2.
Right.
So, you know, these are really robust projects, and the PEA demonstrated that.
Right. Okay. So this is an earth moving exercise, an efficiency exercise, and relatively low capital.
Yeah, you know, the strip ratio is 0.2. Yeah. So you blast like a pig, create as much fragmentation, so you drop your crushing costs, because blasting is the cheapest way to crush your rock. And you don't have to worry about any overbreak, because as soon as you go drill the geotech holes in the wall, they're so mineralized. So, you know, there's a lot of things that go into calculating margin, and we're quite lucky that this is a very, very simple project.
Right. Okay. It is, but it's people are missing that.
Yeah.
Right. And what are the comps to it? I mean, who else out there has got something like this where it has worked?
You know, the prime example, Marigold. Strip adjusted grade is 0.12, 0.15. Now they're moving 55,000 tons a day. We're going to be around 30,000. So it's an economies of scale thing. You know, their run of mine were 2-stage, 3-stage crush. Gold Bar would not be a good example, but there's a bunch of other ones, and I can't remember off the top of my head because I've looked at so many projects. Equinox is another one.
Okay, so
that's probably not the best one, but
you're not inventing the wheel here. This is standard process. Okay, and let's park up for now. Let's bump up to Idaho and what's been happening there. There's a little bit of drilling going on to get hold of some easy stuff, right? Get some quick cash going. So tell us what's going on.
Yeah, so north of the border, we've been drilling all these low-grade stockpiles, okay? If it didn't make the cutoff when Kinross had it, it was stockpiled. So there's about 40 to 50 million tons in these stockpiles. It's already been blasted. It's sitting at surface. It's a free dig.
Yeah.
So different operating costs,
yeah.
Okay? The other thing that having those stockpiles sitting at surface is when you go into production, you already have blasted material. So it gives you a lot of flexibility from where you can blend material. If something happens in one pit, you already have blasted stockpiles over here. So it gives you a lot of flexibility. Those stockpiles, the 40 to 50 million tons that we're talking about, will be going into an updated resource that should be out by the end of the month.
Okay. Let's go to money. Money's important, especially in markets like no one wants to raise money in markets like this. But you've got to obviously in Idaho with the stockpiles. There's different ways you can come at financing something like that in terms of like shared costs, or quite frank. Well, I don't know. What are you thinking about?
So realistically, those stockpiles are going to have to go into the feasibility that we'll put out in 24.
Right.
So you're adding right now what was in the PFS on the heap leach only was 81 million tons. We're going to add another 40 to 50 million tons.
Right.
So how we finance that down the road is going to be,
why choose that model? Okay, we see we see enough people come through the doors here and say, look, cash is tight, but we've got this stockpile over here, or we think there's enough gold in there, which will give us maybe 30, 40 million bucks, which we won't have to then raise, but we are going to have to raise 10 million bucks up front now. So, there's lots of ways you can come at it, but you're saying there's more value putting those answers into a feasibility study, because we think a market will value that for it.
Yeah, and it has to go into your mine plan of operations, because even though they're stockpiled there, you still has to go into your mine plan, and you still need to go through the whole permitting process. Now, how we go about optimization and sequencing, that's the question I think you're getting at. So do we put the stockpiles at the front? Do we blend it? Do we put them at the end? That's the question. And we're going to be doing all that optimization work, and I can tell you we will optimize it to maximize NPV. Okay, that's what we will do, and see if the market gives you value. But I'm sure they will, because it looks, every time we do more work, the project gets better. So that's why I'm always smiling.
Well, yeah, some people will mark you down for that, because that's what people do. Look, so with Idaho, obviously it's had a sort of tough run of it for the past couple of years, but the feasibility study is where the time, money, and effort is going. And when's that out? 24?
What should be at the end of 24?
Right. Okay. At that point, do you say, because it's not your baby, but the company's merged, so I appreciate that, and there was hope that it would, change things, but it hasn't. At that point, do you think that's in a position to be monetized and maybe then get focused elsewhere? What's happening in Idaho? Are people buying in Idaho?
Yeah, you're seeing significant investments, especially from Sandstorm, and other corporates are moving in there. They see a big opportunity. Okay, Perpetua is almost at their record of decisions, and that'll be a significant catalyst for the state of Idaho. Saying we'll monetize it at a feasibility. If the price is right, fine. George and I are the largest individual shareholders, and we're in the business of making money for our shareholders and stakeholders and for ourselves. Yeah. Okay, that's the reality. So do we monetize it if the price is right? Sure, Matt. We have a lot of growth in the rest of the pipeline that we can continue on.
But I only ask that because I've seen some CEOs come through the doors here and they are beaten up. They're like, forget this. I've had enough. I'm selling. I'm out of here. The market has been going on too tough, too long for some. And that's probably a factor of they don't really have good assets and they can't access capital, cash constraint, all that sort of stuff. But with a couple of projects in good markets, risk mitigation through different jurisdictions, great stuff. In tough markets, we don't know how long this is going to go on for. It maybe is a burden too much. Maybe it's too much for you. So do you want to do Idaho? Do you want to do
listen,
DeLamar?
Matt, my whole life I wanted to run an intermediate to major mining company.
Right.
And when I see these assets and the quality of these assets, it burns me to let them go. Because to go build another company with this quality of kind of resource endowment is really difficult.
Yeah.
So, unlike a lot of mining CEOs, I still got a lot of life left in me. Okay, I'm young, so I'm not throwing in the towel. Right. But that said, someone says here's 0.7 or 0.6, 0.8, whatever they want on a PNAV basis. Yeah, sure. You got to remember, permitted ounces in the basin go 0.7 to 0.9. That's the average acquisition cost. So it has to be in that range, and right now we trade at 0.1. So that's what I tell the team. This is the journey from 0.1 to 1.
Okay. Well, that's why I'm asking you these things, because it can kind of crush you. When you get a constant, relentless pressure and you're not matching up to where you think you should be, or even your peers, or quite frankly, on any basis, right? So let's talk about money, okay? So you couple of projects, we know what you're doing in both those projects. How you allocate, what's the best allocation of capital between now and the end of 2024? Because you've got some moments happening in deliverables in 2024. So best allocation of capital, best return on capital invested.
So I think, getting the fees out and continuing the permit, the permit gives huge value.
How long's that been going?
So it's been going, we've been doing baseline work. Last week, we just finished all of our baseline work.
Okay.
So that's done.
Okay.
We will submit the mine plan at the end of December, so this year. Mm-hmm. And then it's basically your 2-year clock starts. Okay?
Right. Okay.
And you need to do a little bit more engineering, a little bit more permitting. So there will be some capital going towards that to deliver the permit. The other way we deliver capital is showing resource growth. Right. And that's in Nevada.
Right.
So that you're not just a boring permitting story. You have nice exploration kind of euphoria stage down south of the border, and you have permits delivering real value north.
And potentially delivering more ounces in Idaho.
Totally.
Too. Okay. So just on Idaho, people's perception of Idaho is it's tough to do. And you've named a few mining companies there, but they have been there a long time. New mining permits, new mines in Idaho, is that a thing?
I totally think it's a thing. Our permitting and kind of external stakeholder team has done an amazing job building the relationships in not only in the state of Idaho, but in Washington, in Jordan Valley. You got to remember, DeLamar is a mining town, right? Since the 1800s.
Well, it was, is, or could be.
It was, it still is. It's a good point. And our biggest pushback right now in Jordan Valley, where we operate, is they want the mine open tomorrow.
Right.
So I think we've done an amazing job, and it's a disturbed site. There was mining there for a number of years. It's not in northern Idaho, where you have beautiful speckled trout and all that kind of fly fishing and people in their third homes going skiing. We don't have that down in southern Idaho. It's a lot like Nevada. So it's a lot from a social perspective. You don't run into all those NGOs that are protecting, beautiful wilderness like this.
Well, I've seen key mines on the way up there. So this is some great mining country. This Nevada is known for mining. You being there a while, you're going through the phases. You're going to have to get all that social license stuff like anyone else. And quite quick process. Is it? No, I don't mean quick in a derogatory sense. I mean, is the process well known and well established?
Yeah, it's very well established. Okay, there's been a lot of turnover in the BLM office. That's one thing that we've been managing. Anywhere in the world, permitting is always difficult. Nevada is probably the easiest to do it. We're very lucky with our Wildcat project. We believe we'll answer the question next month or two, or we don't touch the water table, so there's no pit lake.
Right.
And the life of mine strip is 0.2. So what does that mean? That there's no waste rock facilities. So you can permit it under an EA process instead of an EIS process. So you're looking at kind of 6 months instead of 2 years.
Right.
That's the difference. And there's been, people say, well, how many times has that been done? 16 times in the last 20 years. That's why Nevada's Nevada.
Right. Okay. Understood. So, better wrap up, because I know you've got a ton of meetings, like ridiculous amount of meetings. So your message to current shareholders is, bear with us. We got a great asset, and we know what we're doing. There's a plan. Is that simple as that?
Yeah. We're going to put our head down and do the work and deliver on everything we say we're going to do.
Right.
And the market will give you value for that.
Okay. And then new people looking in at this thing, looking at this going, wow, sub $100 million company. It's got all of these answers, got all of these catalyst moments coming, but there must be something wrong with it because no one's giving them credit. What do you say to those new investors?
I think it's pretty easy that people like Wheaton Precious Metals ripping apart the data room, some of the best technical people on the royalty and streaming sides, seeing the value and saying, you know what, we need a toehold into this, and giving us taking 9.9% of the company in exchange for a ROFR. And when we were running the financing in conjunction with the merger, Franco-Nevada liked the project so much, they went and bought the royalties from Waterton. So, I'm a technical person, but, if you don't want to believe our technical team, well, you can go believe the two biggest royalty and streaming companies in the world.
Okay. Jason.
Good to see you, man.
See you around, hopefully.
Sounds good.
Okay,
Take
cheers.
care.